Welcome back, traders. It's 8:01 a.m. Chicago time on Wednesday, the 16th of February, 2022. It is episode number 2173. Today is the 16th. Yep, the 16th of February, 2022. Just checking my date here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at the market posture, things are kind of shifting from neutral to slight risk off. The S&P itself had 4450 as a terribly weak low. You'll see that there's a ledge down there and was holding steady, and we just broke through. But right now, at the time of creating this, it was neutral, but currently it is really slightly risk off. We're seeing a pop in the bonds, in the notes, the 10-year notes just now, and the market has fallen as well. So that's where we stand. Really quiet news flow overnight. The Russian government stating that Putin wants to negotiate. NATO has come out and keeps cautioning against false, misspelled. Don't like that at all. Hang on. Me no likey, misspelly. Pop. Call me a perfectionist. Against false optimism. We have the FOMC minutes today, really important. But other than that, there's really not that much more to price in. We did get another strong pop higher on the European Open, which resulted in the markets falling right back into yesterday's balance. Yesterday was just, I can't say anything positive about yesterday. It was just a kind of a choppy, non-directional type of trade. And that's where we ended up. It was really tough to hold on to any longs. Yesterday, we're seeing a lot of icebergs. You look at yesterday's profile and you'll see a lot of ledges there. On the calendar, we get industrial production this morning. We did get some numbers earlier. We got U.S. retail sales, which beat pretty handsomely, 3.8% versus 2% expected on U.S. retail sales for January. The inflation rate out of Canada came in a little hotter than expected, 5.1% versus 4.8%. The inflation rate out of Great Britain year on year came in a little hotter as well, 5.5% versus 5.5 versus 5.4. And we have a slew of numbers: industrial production. We have business inventories. A little bit, a half hour after the open, we're expecting 2.1% NAHB housing market index at 83. And then the EIA inventories report expecting a draw of 1.57 million barrels. Again, the FOMC comes out at 2 p.m. Balanced trade out of Japan at 6:50, and unemployment rate out of Australia at 7:30 p.m. Eastern. That wraps up the day. Looking at the S&P, relatively light volume for the range. For the movement, 216,000 contracts. The inventory is 57% short. The range is 40 points so far, 40 and a quarter points. As I said, we finally broke through that 50. Just an ugly looking profile, but it is a B-shaped profile, showing the key thing to take away from the overnight profile is that it is showing there was an excess on the high. The market pushed all the way up to 83. It broke that 68 from yesterday. By the way, yesterday was another day, 2 days in a row, which was extremely rare, historically speaking. The historical probability of that occurring is less than 0.5%, that we would have 2 days in a row that do not meet or break the overnight stat. But what the profile overnight in the S&P shows is an excess on the high, rejection of higher prices above 68 being a high volume node in this area and a key target as outlined yesterday. The point of control, 44.50, a lot traded at 44.50 as it did yesterday. 44.50 also represents yesterday's low volume node and ledge. I don't like this structure at all. So we're going to, we'll talk about that. I'm getting too much into depth there with it. Crude taking a bit of a pop. Crude had come off yesterday. It is back above $93. And crypto, which had was up 7 and 5% yesterday, 5 and 7% yesterday, are coming off a little bit. Crypto is also in a balanced zone. So that's where we stand. Looking at a review of what we had yesterday. Again, this is a 1 tick by 8 point and figure chart. It does not draw a bar unless there is some movement. And that's why I like it. You can see that the movement wasn't really there. Why? Because of the number, the sheer, a very simple measure, a rule of thumb is the fact that we don't have that many bars. This is why I don't, this is part of why I don't like time-based charts. I'm not saying you shouldn't use them, but I prefer to see the action and get a bar when there is action versus the passage of time. The passage of time is perpetual, so I don't really care about that. So we got the 63, built this ledge right here, and really was expecting it to push through and get to 68, take out the overnight high yesterday. And I took 2 longs into that I narrated in the Convergence Trading chat room, and neither one worked. Just losses there. Yesterday was another losing day for me, but this is the kind of day that would be a losing day. We gapped up. We did not gap and go. We did not gap and revert. We just continued to be in an open auction. We barely broke the initial balance, but the delta kept rising and lifting and lifting and lifting. So I kept buying and buying pullbacks from this 60 away from the 60. I kept buying these pullbacks to see it break. And it just would not break. The expectation there was balance. It's balanced the entire session, breaking into imbalance, and it just would not do so. So ended up just not being a fun day. It's just another drop in the bucket of days that I've traded. There have been thousands of them. So this is where we are. Yesterday, again, we left a gap open. You can see the gap zone as outlined by the master levels, which should be turned off here. These buttons sometimes don't work like they're supposed to. Boom, boom, boom. We left a gap zone open. We still have this 44.20 magnet. We still have the 68 magnet up top. This is a small, kind of a short range magnet. We have an over underline at 44.43, and we are trading sideways. Coming into this session, here's what we've done. This is a 1 tick by 20, and we broke out higher on the news that Russia's pulling troops back, and we push up, we pull back into 44.39. Push up, lower high, higher low, higher high, lower low, lower high, higher low, higher high, higher low, higher high, same low at 50. Look at this profile. It just ledges off. And then we may put in a lower low. This is just pure and utter noise here. I'm not likely to do much with the open today unless we have an impulse and a continuation trade. I need it to prove to me that I should participate. And so I need an impulse continuation that actually succeeds, and then I will look to continue in that direction. Other than that, this thing could test back into this 44.36, 44.40 area, and then start to backfill to 20. If you recall from yesterday, the 20 is where we expect it to get. So we have the point of control. The configuration as the point of control has shifted down, and now the VWAP, which was below us yesterday. When we opened, the VWAP and the mid were below us. Now we have the mid above us and VWAP above us. So that's a lid. To me, I'm selling rallies this morning. Again, we have an excess high. The profile is showing an excess high with a B-shaped profile. This shows that we broke out of balance out and we found sellers and came back into balance. To me, this is screaming to sell the rallies this morning. That's the biggest thing to take away. We'll see how it goes. The target today for the range, to get the range stat, which we didn't get yesterday. We only had 30 points of range in RTH yesterday, nowhere near the 42 to 50 we've been getting. So overall, just a garbage trade. And so to me, 44.20 is ripe. This would fill in the gap zone, an untraded area. This would give up what we protected yesterday, and we're likely to sell rallies this morning. Okay, so not much more to say about this. There's really nothing else to offer. I do want to invite you to an event tomorrow. That is the once a month public event for Convergent Trading. It is a live webcast on how to survive and profit in high volatility markets. The link is right there in front of you. It's also pinned in your Google chat, YouTube chat. You can click right on it. Again, the link is go to ct.pro/trading-volatility. You're welcome to join, and that's that. So let's take a look at what's expected for today. Overall, I am not liking where we are. Not liking how this thing is set up right now. There's likely to be more of the same kind of noise. We have compressed quite a bit here in terms of the range and volatility this morning. I'm expecting this thing to continue pushing, so we would finally get our overnight stat. I expect it to break the low, potentially break the 36, come back. This is the over-under line. This is really a structural price that was holding yesterday. This line was here since Sunday night. I expect us to pull back into the overnight point of control, but overall, I expect us to really have a hard time getting through this area. So the area between 50 and 60, 50. If it gets back in there, you're in the noise again. We're likely to go sideways. If we get up there and ricochet and come back down and start making a run, then your target is 20 down here, the 20 stock zone. So I expect us to push to 20 at a minimum from 50, giving us 30 points of range, which is what we had yesterday, 30.75 points, and then potentially poke into the 4409 and back. The 4409 is last week's settle, Friday settle, and value high from the balance day on Monday. So the 09 for the bounce, that's scenario one. So I'm favoring the short side given the configuration of where we are. Secondary, we open up, we poke down, then we get an impulse up. This is something that has really strong directional movement, a strong rotation, 20 plus points, and very poor pullback. If we get that, then we are back in yesterday, the meat of yesterday's balance. We are likely to consolidate here and just hold steady like we did yesterday. So we're back into settle, the prior settle, and we would probably tag 44, 65, and then just sit sideways. And this is just more balance. I'm expecting us to fill the gap in today, though. That's really what I'm looking for today. So those are the two main ideas. Good luck today, and I'll catch you tomorrow morning. Take care.